with the first plenary session, and I invite first speaker, one of two keynote speakers, Professor Grațiela Noja, with her note.
Thank you very much for your kind introduction, dear rectors, dear colleagues, distinguished conference participants. It gives me a great pleasure and honor to be here today, and I would like to publicly thank the organizers for their kind invitation and, of course, to congratulate them at the same time for perfectly organizing everything. It is wonderful to be a part of this top-tier scientific event. As mentioned, my name is Grațiela Noja. I am professor at the West University of Timișoara in Romania, and I'm also the Vice Dean of the Faculty of Economics and Business Administration. What I'm going to present here today is actually a part of the research that I've performed together with several colleagues in my university, but also in an extended team with colleagues from various universities in Romania. And I have to confess, it goes a little bit out of my comfort zone because I mainly teach and the research in labor economics, international labor migration in particular. But considering that it's a topical subject and trying to find something that matches as best as possible the conference team, I'm going to share some insight from the research that we've performed related to identifying several deterring factors, shaping factors, modelers at large of firm financial performance in the energy sector in a comparative approach between the conventional and renewable fields. So I will mainly focus on two topics. Firstly, I will try to give some new insights in terms of the interlinkages between energy innovations and environmental performance, and here at large, the credentials that go to the SDG indicators, environmental social governance indicators, but also CSR strategy and activities. And of course, we have some digital transformation as well, and we extend it a bit by considering also the human capital characteristics, also the board management and the employees. And then we wanted to see the interlinkages between all these coordinates and firm financial performance, and to do some econometric modeling because we mainly focus on a quantitative approach this time, and I will let my colleague afterwards to let us know in terms of business actually how it can be applied further. So we in terms of methodology, we focused on a various range of methods and econometric models. I'm going to present here today only the results coming from robust regression and structure equation modeling, but we've also performed the cluster analysis because we've noted that there are clustering procedures within our data. We have, let's say, an agglomeration of positive values in one side, negative values in the other, so we've applied the clustering procedures in terms of Ward's linkages, but also the network analysis because we do have various indicators within our panel, and it leads us to, and all of the indicators have different measurement units, so it leads us to a possible bias in the results. So we've applied also network analysis relying on two types of estimation methods, the Bayesian one, and that we were able to configure also some Gaussian Markov and mixed graphical models. I'm going to show you a few insights on that and try to insist a little bit more in the methodological part. So after this, let's say, econometric modeling, we'll try to at least I will try to configure some of the strategic lines that maybe companies operating in the energy fields in a comparative approach between the conventional ones and the renewables one can try to implement further. So we had basically three research objectives. First, we wanted to examine the role that energy innovations and environmental performance play in enhancing firm financial performance. Then we also introduced the SDG credentials, and we wanted to appraise the implications that these credentials have, including the human resources landmarks, board characteristics, and employees' characteristics at the same time on the financial performance of companies from the energy field, and of course to make this advanced empirical analysis in a cross-sectional data set. Actually, we have two data sets. One with a large number of companies. We had initially 5,000 actually, but we've restricted a bit the research to try to focus more on what it was planned from the beginning and to match these research objectives. But I will go into details a little bit further when we reach the methodology part. After a brief presentation of the relevance of the topic and introducing this topical subject, I will briefly present also the literature review and focus more on the data that we've collected from the Thomson Reuters Refinitiv ICON database, and of course the methodology that we employed, present several results for robust regression and structural equation modeling, and go further to, of course, some concluding remarks and some political, or at least policy, let's say, policy implications, managerial implications that our research might have in terms of a practical side, in terms of the companies that might consider these results. So definitely the energy sector at the global level is currently in the process of transitioning, right, to the green energy, and there are various challenges that are being generated on the one hand through the efforts to reduce greenhouse gas emissions and the promotion of renewable resources or sources of this type of energy, but at the same time to ensure security of electricity supply at affordable cost for final consumers. So definitely this need for climate change has generated a new transition which poses several economic, social, and technical challenges, but at the same time it also creates various opportunities for companies operating in this field in order to further enhance their financial performance. We've looked deep into the literature, and what I'm going to present here today is just part of many studies that we've reviewed. We've tried to gather some scholar perspective ranging from various fields, but also from various countries in order to have a comprehensive approach of our research. We've, of course, considered the SLAC resource theory, which basically relies on the stakeholders' interest with the level of companies' resources, noting, of course, that more responsible pressure to stakeholder is registered in the case of companies with significant resources than for those with the limited ones. So various scholars have put forward the inclusion of corporate social responsiveness in the financial performance assessment of companies from various sectors, from various countries, regions, and so on. And this is basically the reason why we try to focus not necessarily on financial reporting, but also on non-financial reporting, or an integrated approach from this perspective, and also to see how this non-financial credential in the end leads to financial performance of companies or profitability, rentability increases at the same time. So we also considered the literature regarding the synergy between the CSR actions and the financial performance. There are several authors, and I've named only a few here on my slides, that have examined how actually CSR actions can produce effects, either directly, indirectly, of course, and through various types of interlinkages. And this is why we've used structural equation modeling further on the financial performance of companies operating in the energy sector. In addition, we found several studies that show how energy company implement the ESG credentials in a strategic approach, and how they try to identify and further assess the impact that the ESG determinants have on the financial performance of companies. We've noted that several tend to focus on only, let's say, a small part of this coordinates, and this is why we try to make our research in a comprehensive approach and try to gather a little bit of everything, provide some insights, provide some patterns, extract some impacts, and then, of course, try to develop some strategic lines. For example, we found a study that we focused upon, and that's very close to our research, but I'm going to share my innovative note afterwards, that has analyzed the impact on environmental performance on the financial performance of companies from the stock market, but also in a twofold approach, here relying on energy companies versus non-energy ones, and another study that also focused on bidirectional implications and double causality between the environmental credentials measured through various units and the financial performance, again, measured through several indicators. And this was actually the basis, somehow, along with the other studies that we reviewed in the literature, for developing our own data set and for selecting certain variables variables that have somehow been tested in advance and have provided robust results to be further, let's say, interpreted correctly from an economic and management perspective. So gathering all this theoretical perspective, we noted that there are indeed various studies that approach the synergy, but they tend to focus on different energy sectors like fossil fuels, or separately just for the renewable energy, or in a comparative approach, but none of them have tackled the conventional versus alternative energy sample. This is what we are trying to do now. And as regards the implications of the CSR actions and the ESG dimensions on firm financial performance, of course, the literature reveals diverse findings. They range from positive, negative, or they couldn't find any implications at all. We mainly found positive implications, so I'm letting this know in advance, but I'm going to show you as well how it is supported in a methodological perspective. And another issue, it's related to the way they measure, or in general, we can measure all of these coordinates, the CSR dimensions, the ESG credentials, at the same time, financial performance. There are various types of indicators, and of course, they tend to lead to various results. So it's, again, a challenge to focus on or to select those proxies that tend to entail the best results and then tend to lead us to robust estimates and provide us some sound groundings for our research in order to be able to conclude in the end. And of course, the board attributes that I've mentioned, so we expanded a bit also considering the human capital, the intellectual capital within these companies, both for the board management and the employees. And literature also entails that they have positive implications on CSR policies and firm performance at the same time. So we wanted to test this again. Even though we've defined only 3 research hypotheses, through structural education modeling, we were able to test multiple relationships and try to have this comprehensive approach that we are planning right from the beginning of our research endeavor. So I'm going to provide you a little bit more details as regards what we did from a quantitative approach. So for our data, the data was collected, as mentioned, from Refinitiv database, Thomson Reuters ICON database. It encloses companies operating in the energy fields, distinctive for the 2 sub-panels, conventional and renewable one. We've actually extracted a cross-sectional database, not going to time series, not going to a panel data for the moment. We plan to do this as a future research direction, so we extract data for 2020. And we have configured further 2 samples, one for the conventional energy fields and the other one for companies in the renewable energy sector. From this perspective, we do have a limitation of our study because we found data for a large number of companies operating in the conventional energy sectors and just, let's say, limited data that was available for the renewable energy sector. So we have an unbalanced, let's say, analysis from this point of view, and this could lead to, let's say, somewhat of a sort of self-selection bias in our results in the end. But we try to cope with that, and this is why we've applied several research methods, and I'm going to detail further in a few minutes. So the sample with the conventional energy firms comprises around 500 companies with headquarters that are geographically located in Europe, in particular, the UK, Germany, France, Italy, Spain, Denmark, and Russia. But we also focused on several companies in South Africa, just because they have this integrated reporting that we want. So not only the financial part, but also the non-financial reporting that we tend to focus, and of course, their further spillover effect in terms of profitability. And the sample of the renewable energy companies, as mentioned, includes a limited number of companies restricted due to data availability. We focused on around 40 companies, and we selected selected also the renewable fuels and renewable energy equipment and services as, let's say, sector allocations, if I may say like this. And we also have companies with headquarters geographically located in Europe, in particular France, Denmark, Germany, Italy, Spain, and the United Kingdom. From this perspective, coping with missing values, we had to also make some interpolation and extrapolation in sample, out of sample, in order to be able to have a sound data set and to further process it adequately. So for the indicators, as mentioned, again, a challenge. The data set provides us with over 100 variables that can be used as proxies for these dimensions. So we have the environmental performance dimension, the ESG credentials, the CSR actions, human capital features, and then the energy innovation at the same time, and then the firm financial performance. For each of these, let's say, dimensions that we focus upon, we found lots of proxies, lots of indicators grounded on the theoretical underpinnings. We've then selected only a few, tested a little bit further, or tested some more indicators from this perspective, but in the end, only a few models provided robust estimates, and those are the ones that I'm going to focus on a bit today. So for the financial performance indicators, we've focused on return on assets and return on equities, but also on earnings before interest, taxes, depreciation, and amortization, EBITDA and the EBIT, so earnings before interest and taxes. We have both indicators in absolute terms and relative terms, but either way, in order to better construct the panel, we've applied the standardization procedure. We tried to extract the mean and divide by standard deviation, considering the fact that we have different measurement units for our credentials, for our proxies. For the ESG measures and indicators, we have target diversity and opportunity score. We also focused on policy bribery and corruption score, bribery, corruption, and fraud controversy score, CSR sustainability reporting, CSR strategy, SCG in a comparative approach, total CO2 equivalent emissions to revenues, targets emissions score, policy emissions, environmental products, environmental performance index, and so on. So there are lots of dimensions and proxies that we've applied in our research. And for the human capital indicators that I've mentioned, we've mainly focused on board characteristics, as in board size, board background and skills, board structure, number of board meetings, board gender diversity, women employees, women managers, and some indicators that relate to the training hours, employee satisfaction, compensation committee independence, and so on. So we've selected also based on the literature, based on our own research objectives, and of course limited at the same time by the data availability that is comprehensive enough in order to provide robust estimates, and we further developed several models. I'm showing you now the descriptive statistics for the two panels. There are lots of indicators. Once again, we focused on financial performance indicators. They tend to show modest results for both panels, traditional or conventional energy companies, and the renewable ones at the same time. And this was, let's say, a first sign that indeed the research needs to be deepened and needs to be, let's say, extremely robust in order to extract the correct interpretations and to let's say, shape a bit those strategic lines that we can move forward. So we have some of the data is missing completely for the renewable energy panel due to restricted data availability, and this is why we had to skip those or to drop out those indicators from certain models. As for the methodology, as I've mentioned, I'm presenting today the robust regression estimates and the structure equation modeling results. But considering that it's a very complex research that has several dimensions, around, let's say, 50 proxies per each dimension, that all of them have different measurement units. Some are absolute values, some are relative terms, some of them are scores, and so on. Some of them tend to cluster because we have also the spatial effects, positive and negative spatial autocorrelation that was previously tested through Moran's z-test. We've also applied the spatial models, the cluster analysis through the word methods, which is instead for hierarchical clustering, and also the network analysis based on Gaussian, Markov, and mixed graphical models. However, those, let's say, results still need to be further tested to be sure that they also provide robust estimates. So I'm focusing more on robust regression and structure equation modeling that we've managed to test overall, and indeed we can attest that we do have robust coefficients, and the results tend to be pretty much the same. So the coefficients are consistent in sign, regardless of the econometric modeling procedures that we have applied, even though, of course, as normal, they are slightly different in size. So why robust regression? Well, first of all, it's also a way to process the classical ordinary least square regression. Actually, it runs the OLS first, but then it calculates a certain distance. It's called the Cook's distance, extract the values of Cook D's, and then it begins the iteration process and moves forward to another estimation method, which relates to the maximum likelihood estimation. They start two types of iteration, B-White and Huber iteration. It drops the outliers in our data set, and in the end, it tries to provide robust estimates. It's a way to cope with spurious regression. It's a way, for us at least, and what we've seen in the literature and what we've tested before in our previous articles, a way that definitely in the end tends to cope with the problems that we might have in terms of data availability, let's say in terms of different measurement units for our indicators, different size of the samples, sample size, and of course various other credentials that we might overcome during our empirical analysis. So we have this first model. We basically process 6 models in total. We have 3 models for the conventional energy panel and 3 models for the renewable ones. We focus as a dependent variable on the 3 main financial performance indicators, as in return on assets, return on equity, earnings before interest and taxes. And we've processed those 6 models with, let's say, good results, at least in the first part. It's still a work in progress, so of course, any feedback is extremely appreciated. Because we wanted to see also all the linkages, let's say, direct and overall between these credentials that I've mentioned at the beginning of this comprehensive approach. We've also applied structure equation modeling. It gives us the option to process the data through maximum likelihood estimation with missing values, and this is what we need because we do have some missing values in our samples. So it's a way that provides us testing with multiple relationships at the same time, and at the same time, we wanted to also make sure that previous estimations are supported, even though we change a bit the method that we applied, to see if we get the same results and to see that we have consistency in our research. So this is the general configuration of a model. For this particular model, we don't have the latent variables, we don't have the constructs, we only have the, let's say, the measurement part of the model and not the structural one, because we focus, let's say, more on those direct and overall implications of all of these credentials on firm financial performance. But we do have various, let's say, variants or scenarios for starting with this general conceptual model that we are planning to continue to test further before we send something for publication. So we, as I've mentioned, we have, let's say, around 10, I would say, research hypotheses. But for these two methods, I'm focusing on 3. So we are testing that the ECG actions and credential do have a direct and important, let's say, notable impact on financial performance, both for the conventional and the renewable ones. Also that the human capital features in an extended approach related to board characteristics and employees' characteristics directly and significantly influence and shape the financial performance of those companies. And of course, in the end, that all these actions, particularly environmental, social governance credentials, and the CSR strategies, together with human capital dimensions, notably shape the financial performance of companies, once again, both for the conventional ones and the renewable ones. Sorry. Okay, so I'm going to share some preliminary results that we have. I didn't mention that for testing the results, we've applied the classical test, let's say, in terms of stationarity, in order to cope with the endogeneity at the same time. And for structural equation modeling, we've also tested for scale reliability. We've extracted the alpha Cronbach per item and per total scale, and it definitely provides that we do have this scale reliability. And we've also tested for the goodness of fit of the model, and here we've applied mainly the log likelihood test, but also the information criteria, the ICAIC's information criteria, the Bayesian information criteria at the same time, and let's say the other credentials that provided us with a robust estimate, and also the WALT test for each equation. All of these tests let's say, provided with very few limitations for certain variables that the results are robust and they can be further interpreted. So we have here several results for the robust regression, both panels, and we do see that particularly in the case of the renewable energy panel, we do have an increased level of significance for our results. And they entail several positive effects related to the environmental performance, this SEG actions at the same time, but particularly related to those human capital features that I've mentioned related to board characteristics and employee characteristics, both in terms of diversity, but also in terms of performance and, of course, the general output within certain companies. So we tend to see that, at least in the case of the conventional panel, we have positive implications of the SEG coordinates and, of course, the CSR dimensions upon financial performance. It is more keen in terms of the first financial indicators, the earnings before interest and taxes, less when we consider the relative values, ROA and ROE. And at the same time, we do have a positive impact related to the board features, management features, very keenly entailed in terms of the renewable energy panel, but less as we consider the other SEG credentials. In terms of structural equation modeling, at the same time, we do see that the signs remain the same. So the coefficients are consistent in sign, even though we have different estimation procedures. As I've mentioned, here we have the OLS combined with the maximum likelihood in terms of the robust regression with those two types of iterations. And here we have the maximum likelihood with missing values. So the tendencies tend to remain the same. We do have the positive implications on both sides related to environmental performance, targets emission, policy emissions. We do have positive, let's say, effects in terms of board characteristic, employee characteristics, but we have negative signs if we relate to the CSR implications, both for the conventional panel and for the renewable one. So we have actually 3 models. The difference for each model is that we've changed the proxy for the financial performance. performance indicators going through a bit, through ROA and ROE, and we see that most notable results are for the first model, actually, when we selected as proxy the earnings before interest, taxes, depreciation, and amortization. If we go back to summary statistics, maybe if we have time at the end, or I can do it now, we will see, or you can note actually, that there are very small values, both for return on assets and return on equity, right? And we do have good values in terms of EBIT. So this somehow can be explained partially through this result as well. And even further, in case of the renewable energy companies, the second panel, we do have a negative sign for the return on equity. And this is let's say, a sign of financial distress, but at the same time, not always a negative, let's say, dimension or implication, because we do see here lots of investment that are being made in the first part, in the first year. We do see this at startups, for example, because lots of investment are being made at the beginning, and then, of course, the financial performance indicators tend to sound a little bit, tend to look a little bit better and tend to provide sound financial groundings at the same time. So for the renewable energy fields, let's say the main difference that we see, again, is in terms of the proxies that we use for the financial performance. We have positive implications here as regards, again, the ESG credentials, negative ones for the CSR strategy. We do see some key implications when we consider the compensation committee independence, when we see the part that relates to bribery, corruption, and the other policies that are associated with that. It's a bit different than from the previous panel, but let's say the main, the notable difference between conventional and renewable energy fields tends to be from this perspective of financial performance in the end, and from profitability, going further through different types of proxies that we have for each dimension. The results here are significant, but they tend to slightly lose their statistical significance. We do see particular high level, let's say, of statistical significance at the 0.1% threshold, particularly for the coordinates that are related to bribery, corruption, controversies, policy, and those that are related to human capital features, which are the training hours, women employees, so the board, gender diversity. We do see, let's say, the implications that they have, the output that they generate, the structure at the same time as well, the meetings and the involvement that, let's say, both management and employees do have within the company. So it leads me to, let's say, several concluding remarks, and maybe we can expand a bit the discussion. I'm sure we're going to have the chance to discuss further within our panel discussion. Our research basically focused on trying to bring some empirical evidence that attests, let's say, the implications of the SDG actions, the CSR strategies, human capital feature, environmental performance, and energy innovations upon the firm financial performance, firm profitability, and rentability of the companies operating in general in the energy sector. And we wanted to draw, let's say, some patterns for the conventional ones and the renewable ones, and then to further assess this impact. We do have limitations, as I've mentioned, to our research related to limited data availability, related to the fact that we have an unbalanced panel. We study more companies for the conventional ones and less for the renewable ones. And it's again in a spillover, let's say, fact leading from the limited data availability that we had from the Thomson Reuters icon. We've expanded a bit for our research in extracting data from Orbis as well, and from Amadeus as well, from other other databases that can provide more data, including a large data set for a time series and a panel structure. So we plan to go from a cross-sectional approach to a panel data approach and see if we get the same results. Of course, the time implications are very important, and from this perspective, we do want to focus on a dynamic GMM approach, focusing on Ariano-Bones dimensions and the other procedures that we have there. So our focus was on energy companies in this comparative approach. Overall, I think we can attest that indeed we do have a process of corporate disinvestment in traditional energy sources, and of course a growing interest is, as we all noted, in terms of renewable energy with less, or let's say no, impact on the environment, but that tend to provide very sound groundings and implications in terms of firm financial performance. And we plan to expand this research, as mentioned from the beginning, to also include several additional countries, right, and a panel data approach, and particularly to focus also on a dynamic approach going beyond the cross-sectional data set for just 1 year in approaching, let's say, a period of at least 5 to 10 years to capture the dynamic effects at the same time. So thank you very much for your attention, and once again, thank you for your kind invitation. I think the questions are maybe at the panel, or I...
Yeah, I think we
Okay,
can...
of course, thank you.
Yeah, move questions to the panel side, and now I would like to... Yes. Now I'd like to ask for Mr. Kārlis Vītols with the second keynote on the topic of related to business intelligence and smart data, and I promise this will be a bit different presentation since he's a representative of industry, and this will be also good insights for upcoming panel discussion. So, floor is yours.
Thank you, Didzis. Thank you for joining. I feel very honored to be the messenger from the business sector to the world of academics. Honestly, feel a little bit scared. Yes, so my value added here today is to bring a message of what type of trends I observe on day-to-day basis being in the business sector related to the data analytics in the finance, in the business. And I suppose that some of these trends will be overlapping with the world of academics, or with the help of academics can be radically improved, and we can make things better together. Very quickly about me, only 20 years ago I graduated the Stockholm School of Economics in Riga. Immediately joined not the most typical path, so I joined IT company right after, and 15 years ago I established a company devoted to the data analytics, helping medium and large enterprises in Baltics and in Nordic Europe to make better business decisions with the help of insights into their own data. And ever since, we have grown up to 60 business scientists, I would say so. And the day-to-day life never gets boring. And that's probably the most interesting part of being related to the data. I have brought 7 trends that I want to share you with, and I will go through one by one. And the first one that I want to say is a little bit provocative, because on one hand we think that businesses operating and making large profits are super smart, and I hope they are, I know they are, but at the same time the tools that we use are honestly not always as good enough as we would expect, because when we study, we are being taught a lot of data analytical models, we are being taught a lot of tools, but when you go out to do the job, you are overcrowded with a lot of manual work. And I know there are a lot of doomsday predictions about that accountants tomorrow will lose all their jobs because they will be replaced by the system, but actually it's not entirely true, honestly, for now at least. What I observe is that large companies invest millions into the buying accounting software, implementing better CRM solutions, implementing better billing solutions, but they still fail to provide smart insights, to provide data mining, machine learning, AI capabilities within those systems. So from my perspective, when we help companies to analyze the data, we treat them as the source systems from where we take the data, we lift it and shift it into the environment, so-called data warehouse, and make it available for analysis. But these accounting systems, oddly enough, are not as good as we thought originally. I would expect that, for example, in year 2022, if you have implemented the modern system, you just send an invoice, supplier invoice to the company email, it's automatically detected, recognized supplier amount, VAT, bookkeeping transactions, etc., etc. No, that job is still pretty much done manually. When you import the bank statement, it's being matched with the purchase orders or sales orders, and you would expect that the cash flow is being generated. No, that is still very much rule-based and define how it should look like instead of system provides it to you automatically. So with this note, of course, I believe there is still certain fear to trust AI and machine learning on day-to-day basis. And I was actually challenging myself whether I would immediately jump into the self-driving car and take the route without looking how is it going. I suppose the same with us, business people, business decision makers, is that when we would be told that the system will do anything and everything for you, you don't immediately want to lose control, and you still want to understand what lies underneath. And that is exactly the reason why there is a job for me, for my colleagues. So we are building the data warehouses and business intelligence solutions that come after these source systems, and those are the data analytical platforms. But I actually think that the cautiousness of or this fear of automating machine learning and AI algorithms is just a matter of time. And what we actually see nowadays is company managers, the decision makers, would like to have the second opinion auto-generated. So instead of saying you have to produce that amount, so that's why you need to procure that amount of the inventory items, typically that can be generated as a suggestion, but not implemented so that it automatically triggers all the manufacturing in line. So all in all, accountants are needed and will be needed, especially those possessing technical skills. What it means for academics, I think the same story applies. We will have to be more hands-on with the systems, more hands-on with the tools to analyze the data and make them work for us. Which leads actually to the second point, which is the most core essence of my business, is that we implement data analytics solutions, and those over the course of last 15 years are not as simple as they were 15 years back. So businesses grow, requirements grow, data becomes much larger. I was speaking a lot about accounting systems, but there is much more than that. Even CFO of the company in the board meetings, they don't want to look just on the financial figures. They want to know their core business operation KPIs. So they have to reach out to their IoT systems, telematics if you're related anyhow to the vehicles, social media platforms, and join all the data together to understand how your company performs. And this is very interesting, that on one hand we would be speaking from the financial perspective, but on the other hand it has nothing to do with that. Further on, as I said, if source systems or the accounting systems lack the smartness of automation, then when it comes to the data analytic platforms, there are instruments around, and a lot of them are being used. So if we take insurance sector, for example, fraud detection is one of the most common things being utilizing the AI and ML algorithms. Anti-money laundering analysis is now heavily relying on these advanced analytics. Another interesting thing is that we might think that very much of the demand comes from the company business managers, the willingness to understand the operations in detail, the performance in the detail. And that is definitely one of the major trends driving requirements for data analytics. But the second trend actually originates from statutory reporting requirements, which if, for example, you are joining a finance industry company, they are heavily overcrowded with various statutory reportings. And that's where the things also become very complex. And the interesting part is that you almost need to get that understanding not only at the end of the journey, but it has to be also taught to the operations who enter the data, what it means to enter the good quality data in order to get the insights out at the end of the journey. And at school, we were being taught how to calculate the profitability of imaginary or real-life company. We were taught how to allocate overhead costs in order to derive profitability of one another business line. That is history. Today, all the companies want to go even further into the details. They want to understand how profitable you are. So if you hold an account in a bank and you use various bank products being offered, trust me, they know how profitable or non-profitable you are to them. And that is today's reality, that companies keep this insight down to the very detail of who is the customer, how profitable is the product, etc. And yeah, last but not least, actually, if we are using, I don't know, movie platform Netflix, the next recommendation of a movie is, by the way, generated based on your behavior in past. The recommendation comes from the machine learning algorithms. The same about Amazon. When you buy something, the bundled products together are being generated. So these analytical ecosystems evolve, and we will be more and more into this. Let's see whether we will or we will not want to lose the control and understand how the decisions are being made. Another trend, maybe radically different from the previous two, speaks about what's happening in the economics in general. And if you are in data analytics area, then trust me, you are in a very good position. That's what I tell to my kids. For the next 10 years, I can at least tell you what is the strategy to where you should be focusing and learning stuff. And I brought statistics about the increase of salaries in Latvia, but I do observe the same patterns around neighboring countries. And what it speaks of is that it is very demanded resource, so there is definitely a limited supply. Universities cannot generate as many specialists as are being actually demanded. That is one trend. The second trend, I see that the borders as they were before have vanished. I know that COVID to many of us seems as not the most pleasant event, and many industries suffered, and many people suffered from that. But what COVID did, it brought the most fast digital transformation to the many companies. And nowadays, if I previously used to have like 3 or 5 meetings a day in person, now 10 or 11 meetings happen per day. It's only the question how you feel at the end of the day, whether you can actually switch the brain off. But all in all, the intensity and the borders, well, the intensity has gone up, the borders have eliminated, and how it impacts the labor market. So even the Nordic and the Western European companies headhunt specialists here in Latvia, in Baltics, asking to deep dive into the data analytics world without actually necessarily for travel. So you don't have to be actually in Norway or in Germany to work. You can easily sit in your countryside house and do the job. And if you are looking at this message as a potential employee, that's good news. So your wealth and income will for sure come. If you are a supplier or you are in charge of data analyst, what it means for you? Well, it means increasing costs for sure. It means that you have to invest your energy into empowering people, because it's not all about money, but it's very much how you feel, what the results you make from, well, what you get out of your job and what feelings you get. So it's motivation and care and everything around. And assuming that some of the listeners might be thinking, okay, what does it mean for you? What do I have to learn? Well, everybody today knows Excel, and that's the very core essence, and it's a good one, because that's where the data most typically starts its journey being analyzed. But of course, it's not the maximum you can achieve. The next thing, of course, is you have to master at least one or the other BI tool, because that's what both the academics and the business worlds utilize. And if previously that was something very specific, very luxury to acquire, then nowadays, I don't want to name exact companies, exact vendors, but if you want to reach out and get your own BI tool and use it for your personal or academical or professional purposes, that's out there, and it's easy to get. And then, then, like me, you can start joining the path of becoming more of a technical person than originally thought, because, as I said, I come from the world of economics, but have ended up doing a lot of technical programming job. So the next trend line is, of course, transporting and transforming the data with Python scripting. Everybody now lives in a cloud environment, so calling APIs, getting the data, pushing it further into the database. Yes, Python is one way to go. Huh? And then, yes, we are down there, the data mining, which is the beginning, machine learning. AI is more of a buzzword of the previous two, but still, that is the next level to join. Huh? And on a final note regarding the skill set for the data analyst, I just wanted to say that it's not just about the data analysis. It's also how you present the end result. So actually, we even have a person dedicated who makes interactive dashboards look really good, yet functional and according to the business brand book. So the way how you present data also matters. So it has to have a visual appeal. And it, of course, has one of the two scenarios, whether you do one-off analysis, and then in that scenario, you have to be the artist, or if you automate the data flow and you present it via interactive dashboards to the management on a regular basis, then it's about how you make sure it looks good as well in itself. And then maybe joining the technological shifts happening there in the market and what it might mean for you. Those who attend IT-related conferences probably have heard everything about cloud. Previously, it was just a talk. Now it is happening. It's really happening on the corporate level and in the government level. There was a fear about the cloud security. Now I see that the cloud security is equally or better managed than the on-premise and server-side security. So the weakest point in whatever we can speak about into the year 2022 and the data breaches, they are rather related to the human factor than you would say that was because my data was in cloud. Actually, it doesn't really, it shouldn't really scare anybody going there. But what it means actually for maybe if you want to deep dive the data analytics initiative and you rely on the necessity to establish a database, in the good old days, you go to the IT department, procure a server, find a programmer, find an administrator who can install it, find a programmer who can populate the data. Now it becomes much more easier. Many businesses start their new projects from the business unit, collaborating with involving IT departments, but that is much easier today. You just go like an eBay or Amazon, buy the server you need or rent a server you need, and it's there. So cloud has driven businesses to start much more initiatives than they did ever before. And as I spoke, security is not anymore on a table that much. It's just because we have learned to master it and to control it, and that applies for all the high personal data protection regulations and financial industry specific extra requirements needed. In this case, of course, I'm not speaking about the level where there are government secrets or whatever, but from the corporate sector, that is not anymore an issue. And all in all, of course, as soon as you are given the power to make your own decision, starting a new project, and you choose which components you want because you heard from Kārlis's or other presentation that this is the way to go to, of course, it matters to establish a solid and the right architecture. So it is good to have an IT architect nearby whom you can ask what is the right way to compose everything. And that applies to the businesses that we work with on day-to-day basis, because the way how work was done 10 years, 15 years back is radically different than how it's being done now. And yeah, some observation from the market is that all the major vendors, Oracle, Amazon, Google, SAP, Microsoft, were speaking about going to clouds. Depending what you truly need, some clouds are better than the others. And well, that again goes together with my previous point. It's hard to just consider it as a shop. You go out and buy a service. You still need to have an architect opinion how to do it right. But that makes our life less convenient. It is constant world of change, and the technologies change, actually the people change, and of course business processes improve. And being here from the business but speaking to the academics world, I had to brought some theory, and one of my favorite charts is Dunning-Kruger effect, describing how we treat, with what confidence we treat things as we learn. And for example, if we start learning a new BI tool, we quite quickly get excited and we say it's super easy. Then we get overcrowded with the specific exceptional cases in the data and how do we handle them. So we fall into the valley of despair. And then the more we work on that and fine-tune that, then we become very self-confident. We start joining the slope of enlightenment, and then when everything is stable, we get to the plateau of sustainability. But honestly, I'm never there. I'm usually between valley of despair and slope of enlightenment, because new software versions come. Company change their IT systems, accounting systems. People expect something different now than they expected before. Previously, it was about please provide me the list of invoices ordered by the opening amount in descending manner. No, that was easy. Now you get questions from the business that you have to really figure it out how you will find that answer with the tools on hand. And the more we start to analyze, the more data is there. So the more sophisticated transformations you have to take. So as one clever Latvian said, pastāvēs, kas pārvērtīsies, so you have to be ready for a change. And that's, as long as you want to be in the data analytics, yes, you have to be very much related to the change. Then another, unrelated to the previous ones, but companies also tend to drive the change or impact the behavior, how they want their users, their employees to analyze the data. And in good old days, it was thought that all the reports have to be pre-made, enabled with the filters, given with interactivity, and you just go there, you change the filters, and you get your answers, and that's end of the world. You are self-sufficient with data analytics. No, people want to deep dive much more into what's happening. They want to become their own scientists in the field. They want to really, truly find the answers to their hypotheses and real business questions. And that's why self-service initiatives have prevailed very much into the business sector. So businesses are looking how do we emphasize and enlighten ability to analyze the data. For example, even a sales guy can open up a data mart of the sales transactions and do the ad hoc analysis to understand which customers will I approach next. But that has another extreme. So I think those two worlds perfectly should coexist, and there is no right recipe of one or the other angle or one or the other extreme, because if you just focus your mentality that every question has to be investigated on its own, you by design put very much pressure on the effort needed. However, if you predefine everything via interactive report or a dashboard, it is predefined, so you cannot unleash the potential of deep diving into the unprecedented questions. So these two things should coexist. I see that a lot of corporate sector nowadays says, we're done with the interactive dashboards, let's just do the self-service analysis. Everybody of us is scientists, let's give them all the tools necessary. And then, of course, the question about the governance. How do you govern your data? It's not just a process, it's actually something you possess. It might be super sensitive if we speak even about the commercial secrets or personal data. So that all comes to play, and there is a well, any company, any institution has to find the right balance for choosing the approach. And before my end of the presentation, I just wanted to say that one of the trends or the messages I want to bring is that always look on the bright side of life. If many of us, when we analyze the data, we do the research, we look backwards. 99 out of 100 questions are about how did I perform, not how will I perform from the business sector. Oddly enough, right? We think that all the business people are only thinking about the positive future, great profits, and a happy life in Bahamas. But the questions we get are very backward looking. And that's what I said, maybe with the help of academics, improving accounting systems, improving the level of know-how, what comes out as soon as you graduate of the university will make those systems and those processes and those corporate sector life better. So let's think about the future and let's maybe trust the machine learning and AI algorithms to the certain level. And yes, this is the short summary of the trends that I wanted to convey from what I observe in the business sector. Thank you very much for the attention. I understand that the Q&A session will follow, so thank you very much.
Thank you. Yes, indeed. Thanks to both first keynote speakers. It's also always a bit of challenge. And to start with, and now, according to our agenda, we will proceed with a discussion panel on the topic related to intelligent data analysis. Let me quickly switch the screens. No, this is a slide for one. Yes, thank you. And I would like to invite here to the stage members of the for the discussion panel. So please, Professor Grațiela Noja, Mr. Kārlis Vītols, Professor Tatjana Volkova, also Edvīns Elferts, and Dace Kvalberga, please. See you later. See you later. Thank you. Let me pass you a microphone. And, yes. Well, I think that we can start this discussion with more like a general question. How do you think how to get the most out of data and the most value of the data? I think there are different perspectives from academics and professionals, so it would be interesting to hear from from you. What's your take on this? Where is the value hidden? So, please. Please.
I'm happy to start. So hi, my name is Edvīns. I do represent KPMG in Latvia. We've got an organization we call KPMG Lighthouse that deals with data analytics and various types of AI counterparts to it. I guess in order to answer this question, I'd say that in order to get value out of data, I think the first thing that is very important for any organization or entity is really to answer what are you planning to do? What are your goals with having access to that data? I think this is really the key. It's always about the essence. Are you trying to simply generate more transparency into be it your cost structures or etc.? Are you trying to empower your people in a sense, giving access to the data, making it in a way more democratic? So that anyone can be in a driver's seat and analyze it more effectively, or etc. So that's why I think this is really the key. What is the purpose? Once you answer that, I think everything else kind of falls in line.
Yes, hi, I'm Dace Kvalberga. I represent the small middle segment businesses who implement business analytics, which is the latest trend, I think, that is new. And I would say that the very big part of the success is to get the data literacy levels up and to make the organization employees to start to understand the data in general. And then they can maybe discuss also more to give the topics what Mix mentioned, what we want to get out of data, what is the goal that we want to achieve.
Let's start all in the row, in the beginning, at least to introduce ourselves. Yes, I'm coming from academic field, also delivering training also for executives, and it means some, practical touch. But speaking about issues you raised during your presentation, it's very important to look forward, of course. And I agree with colleagues. The first, it's to look what we are going to have in the future, what are our aims, goals, inspirations in order to implement the mission and vision. But in addition to that, I would like to say, to answering the question, how we could get out most of the data, it means that we have to possess certain capabilities like business intelligence, you mentioned already, but also industry intelligence and environment intelligence, understanding what are the opportunities, threats are coming, and this should be combined together with this creativity and also imagination skills, not only looking from data perspective, but also to understand meaning, what we could bring, what kind of meaning and what kind of message it brings to us. So more forward-looking, but of course understanding where we stand now and what we need to know for the future, what kind of data we need, for which purpose we need, and what meaning we give to this data. Okay. Thank you.
Okay. To supplement the previous speaker, so to get more value out of data, you definitely need more data. You need smart people who can articulate that. And of course, you need tools to work on that. And I would rather even emphasize that you need high quality data, because quite often companies capture some facts, but we as human beings know the context, and we know it better how to make automated and right decisions. When we ask systems to do that, quite often systems have not captured that context in the data. It captures only the basics of it, and that's why we quite often cannot unleash the potential of things working for us. We still very much want to do it manually with our hands. Quite a funny thing, if I can reflect from a day-to-day life, when something beeps in your refrigerator, what do? Do you investigate what's really in it, or you just press the button mute, right? So this is very reflecting on what I see on day-to-day basis. We need to invest a little bit more into the capturing more quality of the data instead of pressing the button mute, because it's easier or simpler not to deal with it at the moment.
Okay.
We'll try to combine the two approaches coming from the business representatives and the academia. Basically, our university constantly struggles to support our students in having digital skills and having the right skills in order to engage successfully in the labor market. In terms of data, I will share, let's say, a few directions that we tend to focus on, because we've developed together with several companies, and we were talking about earlier about a partnership that we've developed with Nokia, for example, when they do seek out our students and engage them in data analysis, data processing. And for that, we expanded a bit our curriculum, and we've introduced big data bachelor programs, and of course, for the master programs as well, that are focusing on big data and data processing, and in general, informational systems that are processed for businesses. So the struggle continues to be in being close to the business representatives, providing the right skills, the necessary skills for our students to successfully engage in the labor market, particularly for these top positions that relate to data processing, data analytics. And furthermore, there are several, let's say, partnerships that we've developed together with other universities in Europe and various universities from various parts of the world, in joining forces to create a common curricula. For the moment, it's divided into a virtual campus, or it's focused mainly on that. But the main aim is also in terms of big data and data analytics in terms of financial processing.
Oh, thank you. And also continuing, note done by Kārlis, I would like actually ask a bit more provocative question maybe to industry representatives. So how do you think, what is more important, smart data or smart users of data? Yeah, sure.
Look, I mean, I think the answer is quite obvious. It's both in a way, as simple as that.
Sure. Sure. And
Yeah, I was while I was writing my master's degree now, and I was researching what are the levels of knowledge in general for data literacy in different segments and for different industries, and there was percentages of like 74% of people in general are afraid of data. So when somebody mentions to them that you have to deal with some data, they don't feel comfortable. So even if we define the right goals, we meet a lot of struggle when we meet the people. So at that point, it just doesn't. We can't get to the result anyway. So.
Sure. Thank you. And then you also touched upon people, of course, the ones who are actually operating data, interpreting them. And I'd like to ask you, so what do you think is a good data analytics specialist? I mean, I guess it would differ for industry and academia, and be interesting to identify maybe those touch points and also differences, also possibly some skills which are lacking on either side and which are actually widely available. So, yeah, please, who would be first to start?
I will start. What is very important now in academia to prepare such specialists, but as we see, the history says that you can switch from one field to another, constantly you have to learn, lifelong learning. But nowadays it's so much emphasis on soft skills, because it's teamwork what is important, and as Kārlis mentioned, its ability to present the data, to tell the story. And this is really how you engage with the audience, how you present this data to management, to your colleagues, and also to the board. This is skills what need to be learned. And this emotional intelligence as well, and not to scare with those findings from this data. Yes, to present it's like an opportunity, and of course to highlight, key issues which should be discussed on different levels. And data analysts are not like a rescue for the company. It's one of the complementary team members, but this needs to be analyzed from different points of view. And we can't just expect that data analysts will come with some solutions. It should be found in cooperation with others and based on context and what we are looking and where we are going. Yeah.
I would just like to add a few things. I perfectly agree. Even further, I think that our students need to have very good knowledge, financial knowledge, and they, besides those technical skills, soft skills and so on, they do have to really know the subject, because when companies come to us for various workshops, programs that we deploy together, they look for those students, best students that do have very sound knowledge, sound financial knowledge, good skills. They do tell us three things they want from our students: to really know, let's say, that not necessarily theory, but to have a solid theoretical groundings for their bachelor program, to know Excel in an advanced way, and to definitely know English, or at least one or two foreign languages, in order to be able to develop within a company. So I think that the first step is for them to really develop some solid groundings in order to know how to do, what to do with that data. It's not about processing. It's also about the way they deliver some solutions, they deliver some, let's say, strategics in terms of their presentation and preparing the reports, not just applying some Power BI and some, let's say, advanced softwares in order to process that data, but to getting there exactly to what, let's say, the CEO needs in particular for their further strategic management analysis.
Yes, I think if we talk about the business analytics, then it consists of two parts, the business and analytics. So if we look from analytics part, that data analytics should learn more business, and business, those who learn business in school, they should learn more of analytics in general, even the basics and practice the thinking. If we look from any other field, which is not like a business analytics or data analytics in general, I think it's about all industries that they basically all professionals should learn something about data, because otherwise, if we look at the amounts and the speed how the data is increasing, and if we're not going to get that skill, it will be very hard to navigate in the future.
And some space for creativity or ability. Is that, to what extent maybe that is important too, in addition to those two qualities you already mentioned? So, yeah.
That is a soft skills
well.
that involve creativity as well, yeah. Sorry.
Creativity definitely is very important, I think, because now when there are so many components, you have to think how to put them together. And this is where the creative minds are needed. And you have to train it. Creativity can be trained. And I think this is also, teaching creative thinking is something that I think could be a future skill.
Maybe creative thinking for business as optional course for us to consider.
At some schools I think in Latvia have this type of workshops.
Yeah.
Let me just add a few things. I think it's, look, I might even challenge sometimes. It's what is a prerequisite of a good data analyst? You know what I mean? Do you really need a university degree? Because when we hire people, in particular sort of as BI developers, etc., there is so much open learning available and so many technology platforms just provide it. It's just YouTube it. There are so many people that are, posting free content basically, how do you do this and that and etc. And I've kind of seen, it's more and more people actually just coming from completely different type of a sphere, and that have decided just to kind of change a bit of their career in a way, and they've learned a little bit of technical skills, and it's a good prerequisite for them to sort of start somewhere. So it's in a way, it's kind of an interesting challenge as well. What is the right kind of curriculum, I think? How do you prepare people? Because the key things really in sort of data analytics world is one is, as we've heard, of course, is the storytelling. It's you might be the most awesome, sort of technical person in the world, but unless you're able to tell it in a simple terms, what exactly you're doing or what are the outcomes of that, everything you've done is really kind of becomes a little bit more meaningless, and it's harder for you to sell. Because the type of people you start, if you're sort of in a selling position or you're doing these types of things, the type of people you usually start a conversation with are sort of the business kind of minded people that really care about the outcomes. They really don't care about the nitty gritty. So it's kind of a bit of a mix of both of these things, right? It's understanding the technical world, but at the same time being able to explain it in sort of a business terms, right? Having that, a bit of that. The other thing is, I think, that is extremely critical is really the problem solving. And it's almost, it isn't a skill per se, it's more like a competence in a way that you can build over time. Because there will be every single time you're going to be doing something new, you're going to be put into a new context. There's always going to be something that's going to go wrong. Something with a database you haven't encountered before, something you haven't done before, and et cetera, et cetera. So that kind of really willingness to deep dive, to understand what is kind of happening, challenging your prerequisites and asking for help when it's sort of needed, I think is super, super critical. I personally think that most of the data analysts today that you've got is the teamwork is super, super important. There is no way you know it all. It's really impossible because technology is changing so quickly, the trends and et cetera, et cetera. So it's kind of one of those things as well. You have to be comfortable saying, you know what, don't know this yet. Can you help me out? But I'll figure this out later. Yeah.
Just that what been said already, because it's teamwork exactly, but at the same time we have to establish in companies, organizations, common vocabulary about what we are talking and what terminology we are using, what meaning we put to those things we are telling. And we have such a kind of interesting very interesting and approach for combining cybersecurity, management and governance. And we see these technical issues should be seen also from management and governance perspective. And the same as you said here, it's business and analysts. And this indeed understanding very well business needs and business development trends and language what top management is speaking, and of course for top management and management to understand the language analysts are speaking, using what you said, different tools which are developing so fast. And this is a big challenge for universities to prepare graduates which are very fresh, updated on the fast developing software, which we usually don't have at the universities. Therefore, professionals are coming and professionals are very much welcomed in order to help and to prepare those graduates which will be further very big added value for all companies. It's our joint efforts. We have not to blame universities and universities not to blame professionals or industries that they are not supportive. It's our joint responsibility.
I would add a few things here. In terms of, let's say, these types of partnership, I think we are kind of moving towards dual education, because with the help of our business representatives, we try to train the students starting with their final year, in particular of the bachelor studies and for the master studies. For example, you mentioned about softwares. We have a partnership with Drexelmeier. They support us in financially in terms of providing the licenses for certain softwares, and we teach them how to use that. They also come and do some training, and in the end, they select the best students for further positions, internship for at the beginning for about half or 1 year or so, and then if, of course, everything is all right, they can extend to full-time employees. So we do have those types of dual educations. They come and support us financially, but they also benefit in the end of, let's say, the best students that do have good knowledge and skills in certain, let's say, tools that they need and that they use in their own businesses. So it tends to be, let's say, a trend for about 2 or 3 years or so. It's the same for the banking system as well. The banking system also comes and does the let's say, the training in terms of financial literacy and beyond what they need in the banking system, using the same tools that they have. And in the end, they also launch some challenges for our students. And the best one that really managed to cope with everything are further selected for their own teams. So it's more like a dual education from this perspective. But in terms of business in particular, less considered in the economics, that goes more in the theoretical side.
Oh, great. You mentioned also, say, industries or, for instance, financial industry. So my next question was really about, let's say, use of data, but and the differences on the industry verticals. How do you see, are there any industries which are more, let's say, successful in utilizing data, and maybe it's due to historical reasons, or maybe they are able to adapt faster, let's say, to this changing environment? So what's your perspective? Maybe which are the leaders and where, and which are the ones where there is large potential lying, but still are just catching on?
Unexplored, yeah. I think the colleagues from the business.
I can say from my observations, we work literally with almost any industry, so I cannot pinpoint one particular which is more innovative than the other. In all industries, companies have their financial data, so by design they analyze their financials, but they combine it with core operations. And if you speak to manufacturer, finance industry, retailer, wholesaler, they all have their specifics data that they want to combine and make things out in a smarter business decisions. And I would say so, like willingness to learn from the person impacts what he or she achieves in life. The same applies for companies. If the willingness to make smart decisions is there in a company culture, then companies get there. and it doesn't depend on an industry, I would say so.
Could I ask a question to you?
Yes, please.
Sure.
Because this is a question not only about industry, but also size of companies. Yes, you are working with, and also scale of operations. Maybe you could open up a little bit. As in Latvia, we do have small and medium enterprises, 99%, and you know, out of it, 7-8% micro companies. So what are your target groups you are working with?
Yes, from the Scandic Fusion side, we are working with medium to large companies because that's where you are ready also to invest time and money into automating, into considering various scenarios. But when you look at the small companies, micro companies, they still need data analytics. And one of my points in the presentation was that the tools have become so available that nothing prevents a small company to be in line with data analytics as the large corporation. Even so, it can be even more innovative and more agile because large corporations have to deal with the data quality issues that I was addressing, and the, I'd say, the bigger the work, the longer time it takes to actually implement. Small companies are agile. They just want to get to their profitability. They get there as long as they want.
Yeah, that's, I want to ask you, is it also with your customers the same way?
Because I'm working with the small and middle segment. So I would say that about the industries first, then we see that wholesalers and retailers are the most active ones because they have very low margins, and they are just, it just becomes a necessity to get in more detail and to understand where are those little things hiding. And regarding the small segment implementations, the agility can be a problem as well in this segment because in the small middle segments there are much lower success rates for business intelligence, and because there are many organizational factors that affect many things are changing, decisions are just made by one person, and it's just also the budgets are not that big, and people are shared. They share different roles, and it's hard to get the attention as well. So that those are the things that I've noticed in a small middle segment that are there.
I'm applying a little bit of visual thinking to supplement what you say. That was also my trend number one combined with trend number two. So I really wish the systems were smarter because small businesses cannot invest that many effort on their own, and if we multiply that effort by all small companies in the economics, that will be waste of economics time, I would say. So in that sense, I really wish the academics and the business people will join their efforts to make those systems even smarter.
Yeah, not even like smarter, fine, but small middle segments, they are not that bothered about smart systems. They just need something that does the job, and you don't need to define the databases and talk the technical language, and to make them more automated and just seamlessly working.
Yeah, so. But they can come with the analytics out of the box, right?
Of course, yes.
Edwin, what's your company?
Well, one would say that telco, technology, and media is usually the one that's at the forefront. It's just, I think, historically, these types of organizations have traditionally been dealing with loads of data. And I think as a result, kind of, in a way, maybe puts them, sometimes one would say, at the forefront. But there is a mixed bag of, I think, of maturities across industries, etc. Really depends. You know, you might have within one industry a specific type of a leader that is really, doing outstanding and is above, telco and any other kind of organization. But sort of, if I have to generalize, I think that's the type of industries I would say. And again, it's simply, telcos deal with loads of customer data with, pretty much core qualities, customer servicing. I think the more customer focused you are in a way, and if you're selling some sort of a product or service where that really impacts your bottom line and customer, acquisition and et cetera, satisfaction, all of those kind of scores, I think the more proud you are in a way, perhaps to really understand quickly what is happening, to receive and get those signals kind of in-house in order so you can act and react quickly. I'd say, I think in such a way. But at the same time, it's a mixed bag. I think it's interesting. We work predominantly with sort of really large enterprises. It's just historically how it's been, and it sort of makes kind of sense from our perspective, the type of company we are. providing a lot of sort of consulting and traditional audit and other kind of services. And for us, it's really, we are sort of just staying with the existing customers we have and trying to climb the customer ladder and providing more and more services. But at the same time, we see more and more as well kind of medium-sized organizations as well coming our way, and etc. And for them, we think it's what we're trying to provide is in a way this kind of experiential type of walkthrough. How do you start somewhere? Because there is still, I think, a huge interest when people sort of say, well, but how can we simply work smarter? And it kind of, again, goes back to what is the aim? Why are you implementing this kind of BI or whatever type of solution? What are you trying to achieve? Just to be agile? Is that the purpose? Or is it, you know what I mean? You just want to really make decisions kind of in a quicker way. Maybe you really don't need that. Maybe that kind of one person who is working there and making all the shots is sufficient. You know what I mean? I sometimes challenge that because it sometimes is sufficient, you know?
Thank you. Listening what you are saying and looking into audience where are representatives from universities and academia and a few business people, but we know that more are watching. I think that we have to look at universities as well as the big customers, because these are big organizations with a massive data sets, and intelligence and also organizational intelligence is much needed in order to analyze this data and also present this data to communities, to society. Are universities part of your target groups?
Word taken. Now you will be. And honestly, from the Scandic Fusion strategy, we have only worked with the corporate sector. But we always collaborate with companies, as I said, who are willing to learn and get value out of data. So for university, my proposal, at least from my side, would be rather let's join efforts, because I immediately imagine how your willingness to study your data can become part of the course material that students have to master. So in that sense, I would rather not give you the fish, but rather the fishing rod.
It's always good, you know, to know that partnership could be established in this direction as well. Thank you.
Yeah. One more question regarding industries, industry verticals is from actually academic perspective. Are there any industries where it's, let's say, easier to get data and to interact with really this intelligence side in cooperation with these industry partners? And are there any those which are again more challenging ones from this research and scientific perspective?
From my point of view of my university, we develop partnership mainly with large companies, multinational companies, and less with small and medium-sized enterprises. And let's say the most representative partnership that we have are with the automotive industry, and companies operating in the sector, and as well with the financial and the banking system at the same time. Actually, it was a joint initiative, and starting with this year, we also have a national day. It's on the 11th of April of financial education. And it's a mixture of business representatives and academia that join forces. And throughout the day, we have all sorts of workshops. And not necessarily workshop, it's a way that we can, let's say, formalize the partnership, extending or going beyond the university. And more keen, I would say that it's not always just a headhunt for them coming and, let's say, just training and trying to find talents and best students for their further actions, but rather a general strategy or a general view that they have in involving themselves together with universities and other partners within the society in, let's say, bringing some value added, for example, and making something that really counts in terms of at least local development. In particular, they are quite keen in working with local authorities, at the same time with universities, with labor market observatories, and in general, it's let's say a benefit for the society at large. Besides the headhunting that, of course, tends to be an advantage, but our students do benefit from it. They do lots of training. They have access to data before they get employed. They work on several data sets, large data sets that our partners provide. They do some business cases, right, as they would have done it if they were full-time employees, and they really engage in activities that these types of companies develop. And indeed, we tend to, let's say, cluster somehow in the automotive and the banking systems in particular.
Great, thanks. Now we have, let's say, covered this situation as it looks as it is right now, and I think have identified several challenges and opportunities as well. But if we take a look, let's say 5 or 10 years from now, also, we saw already some insights in one of keynotes, but do you agree, let's say, with the vision presented by colleague, and what are your thoughts maybe regarding this one main thing where you see definitely data analytics is heading? Will it be, I mean, fully like machine learning algorithm manage the field, or is it technologies, people again? So what's the first thing comes into your mind when talking about not so distant future?
I would say just something very briefly, not to monopolize the discussion. I would definitely bet on people rather than on machines, but I'll let my colleagues explain how they see, or maybe their perspectives in terms of business. How do you see?
I also bet on people. I think the tools will become more handy, but the people will be the ones who evolve and systems will follow. And if you speak about 5-year term, for IT solutions, they will change the look and feel, they will change the capabilities. But I am a bit skeptical about the possibility that in 5 years it will be fully automated, machine learning based. I'm a bit skeptical. I think it will be much more than that we take use of today, but it's still a way to go.
I'm thinking that low code is going to be huge and still continues to be a very significant part. If you have a look at what are some of the really large organizations technology doing, in particular Microsoft, is, well, they've got traditionally, right, these CRM and ERP, enterprise resource planning sort of systems, which are really the core of how they manage, finance and their whatever supply chains and all of that type of stuff. But what is a bit of a trend, they've been experimenting over the last really many years, kind of releasing these, power platform type of things, which allows you basically to use kind of low code. I mean, Power BI is a visualization tool, and, there are other sort of automation tools, so low code application building. Really, it takes for somebody who doesn't know anything about it, it's just, I don't know, maybe 6 months to watch some YouTube and really experiment on the job, and suddenly you can create your own kind of applications for your own sort of purpose. So I think it's going to become more and more important for the organizations. I think the type of people in data analytics, or in particular, if that's what we're sort of talking about, it's going to be sort of that combination of business acumen, understanding your finance, but as well being able to use these tools. You won't need to be sort of a software developer, but I think you'll have to simply be proficient, as you are with Excel, with some of those types of tools. I think it's just kind of tools of trade. I think that's gonna happen. But the other thing I'm thinking is sort of, we as an organization are betting on managed services as a huge trend as well. And what it really means that you will have essentially organizations looking at opportunities to, well, maybe some of that data management, maybe some of that visualizations and analysis, etc., could be done by external firms for you on your behalf, and you can simply focus kind of on your core function, unless that's sort of your competitive advantage and you want to keep it in-house. That's just kind of one example, but there are multiple other kind of managed services, I think, that will become more and more important, and you'll have a lot of type of things just productized in a way, more and more kind of apps coming out for various types of solutions, more configurable, more sort of simple to use. I think those two trends I'd mention. Yeah.
Following what's been said, when you say about low-code, no-code applications, there are already doctoral dissertations are prepared on that, and one student discussed it. Why should not we investigate how low-code, no-code application enhance performance? But I said, what are the triggering factors behind that? is it low-code, no-code application, or you need to build understanding, awareness, this digital leadership, and also organizational culture which supports this implementation of those applications and to deliver training, awareness. So this is an interesting really trend that in the future that we will still need to be even more agile, flexible, because all those tools will be jumping on us from different corners, and we have to think how to navigate through those uncertainties, but at the same time, as topic of the conference is to build resilience and on operational and strategic and organizational level. These are all interesting times we are living through, and this means that all together we have to win these uncertainties and to see those opportunities around us and to build the right organizations and capabilities.
So, and that's it. Anything to add on future?
Well, if I think about the future, I remember that visualization that the colleague showed about the self-service platforms, about collapsed legal house. That is thing that worries me a lot in the future. But I don't know where it's going to go, because it could go because more people start to work with data, and the amount of data is increasing so fast, and we can get those technologies also to work, but we don't have the skill to do that. So that is the thing that worries me about the future, but I'm not, I can't say any predictions about that part.
Oh, that's also fine.
Yeah, and another interesting topic is that at the moment already, large companies on average use about 3.8 tools inside, okay. And more than half shares the same data sources. And it's a lot of competition inside the companies as well. So that is one interesting tendency that I think is going to bring something new.
Sorry. I think that I really do see the benefits of digital transformation, but also digital disruption in higher education. For the future, we've seen that the MOOCs have developed tremendously. We have the massive open online courses. As my colleague has mentioned, you can access it everywhere. You have access to education, online courses, and so on. And we actually made some significant efforts joining various universities in Europe, like the one in like Torino in Italy, like Zaragoza in Spain, and other universities in France as well. And we have joined forces for a virtual campus. So speaking about, let's say, the future, in a few years, we have already configured a virtual campus for our students where they are all connected. And but I think the benefits are tremendous, but at the same time, we have to keep in mind also some negative consequences or spillovers that digitalization has. Because if we take a look at the forecasts of the World Economic Forum, they mentioned that they estimate actually that by around 2030, millions of jobs will be endangered because of this, let's say, automatization process. And it's a struggle between universities, education, trying to, let's say, cope with adequate strategies and policies that will be able to cover for this and to better match the skills that, let's say, the students have with the labor market needs in particular.
Yeah.
I think an interesting notion is to think about if organizations are changing sometimes their project plans using the agile on whatever 2-week, let's say, increments. What about universities? Should they change their curriculums in increments perhaps as well in order to adjust? No, fantastic. It's just, is it quick enough?
Yes, this is a good question, if I may. Yeah.
But
yes.
in terms of change, we do. We already
Yes.
have that. But
Yes.
how fast? Yeah, that's the question.
We are now moving towards these microcredits. The students could take, some modules,
As well,
and
yeah.
then combine together, because indeed, as the environment is changing so fast, let's imagine students who are coming next year, it's 22, 23, so we have to prepare curricula 4 + 2 master, okay, let's say 6 years ahead to think what kind of content we have to provide, and it's been accredited, content, and then if you change 20% of curricula, you have to go to confirm that these changes are acceptable. So this exactly this flexibility of universities, and through what colleague told, through this virtual universities and microcredits, it's a way how we could enhance maybe flexibility of our curricula, recognizing those credits brought already from workplace, and also those who got have been taken from another universities abroad, and this will bring big challenges for us as well, yes, but it's already, we are moving towards that.
Okay, thank you. And I guess in terms of timing, we have possibility to have one question from audience, if there are questions. Well, I guess, yeah, since we have no question for audience, then I'll say big thank you for all discussion about members. And just with this, we conclude the first plenary session of today, and see you 11:30 at the second plenary session. Okay, thank you.